What if I told you there's a tiny biotech penny stock that some traders believe could suddenly explode even after crashing massively from its highs? The craziest part is this company operates in one of the hottest sectors in modern medicine, which is immunotherapy, an advanced disease treatment. But before you get excited, you need to understand why this stock is considered both potentially explosive and extremely risky. Right now, biotech is one of the most unpredictable sectors in the market because one positive clinical update can send a stock soaring overnight, while one failed trial can completely destroy investor confidence. That's why experienced traders constantly monitor small biotech companies looking for hidden opportunities before Wall Street notices them. This particular company has already been crushed badly and many investors forgot about it completely, but sometimes forgotten penny stocks become the exact names that suddenly come back to life when new catalysts appear. The real question is whether this stock is preparing for a comeback or slowly heading toward disaster. Now here's where things get interesting because this company is not building a simple product. Instead, it focuses on therapies connected to cancer, autoimmune diseases, and inflammation-related conditions. These are massive markets worth billions of dollars globally. The company's focus revolves around immunotherapy, which means helping the body's immune system fight diseases more effectively. Large pharmaceutical companies are investing billions into this field because successful immune therapies can become extremely profitable. That alone keeps speculative investors interested in small biotech names like this. Now imagine a tiny company with a very low market cap, operating in a billion-dollar industry where even one successful partnership could completely change its future. That's exactly why biotech penny stocks attract so much attention. But at the same time, most small biotech companies struggle financially for years. This company currently has multiple therapy programs under development, and some investors believe its technology platform could eventually attract larger pharmaceutical partnerships. Partnerships matter because they can provide funding, credibility, and long-term survival opportunities. Without outside support, many biotech companies fail before reaching commercialization. One thing that makes biotech stocks different from normal companies is that investors are not just betting on earnings reports. They're betting on future medical breakthroughs and clinical trial success. That creates massive volatility because sentiment can shift instantly after a single press release. Before revealing the name of this stock, you need to understand why traders are still watching it despite the risks. First, the company operates in huge medical markets. Second, the stock price has already collapsed so badly that some traders see rebound potential. And third, the company still has active clinical programs moving forward. Another reason traders monitor the stock is because low-float biotech companies can move violently when momentum arrives. When retail traders suddenly pile into these names, volume explodes and price action becomes extremely unpredictable. That's why aggressive traders keep these setups on watch lists. But there's another side to the story that many people ignore, and that's the financial danger surrounding small biotech companies. Developing therapies costs enormous amounts of money, and most clinical stage firms operate at heavy losses for years. That creates constant dilution risk for shareholders. And if you've invested in penny stocks before, you already know dilution can destroy shareholder value overnight. A stock can rally hard and then suddenly collapse after a financing announcement. That's exactly why biotech investing is considered extremely high risk. Now let's talk about one of the company's biggest focus areas, which is autoimmune disease treatment. Autoimmune diseases affect millions of people worldwide, and pharmaceutical companies continue searching for better therapies because existing treatments don't work perfectly for everyone. If a smaller biotech company develops something promising, the upside opportunity could become huge. The company is also working on therapies connected to immune system regulation and inflammation, which is another major research trend right now. Scientists increasingly believe chronic inflammation plays a role in many serious diseases. That's part of the bullish argument surrounding this company. But despite all this potential, the stock itself experienced massive selling pressure and many investors abandoned it completely. Some traders believe the market lost confidence because of financial concerns, while others think the company simply became overlooked. Either way, the stock now trades at levels attracting speculative attention again. Now let's finally reveal the stock, and that company is HCW. Biologics, ticker symbol HCWB. This clinical stage biotech company develops immunotherapies designed to regulate the immune system and potentially treat cancer, autoimmune conditions, and inflammatory diseases. And because it trades as a penny stock, many investors believe even small positive news could trigger explosive momentum. HCWB One of the company's important therapy candidates is HCW9302, which targets autoimmune-related conditions. Investors are paying attention because autoimmune treatment is a massive market and positive trial updates could increase investor interest significantly. Clinical updates are often major catalysts in biotech stocks. The company has also discussed work connected to CAR-T-related therapies, which remains one of the hottest areas in biotechnology. CAR-T technology has already produced major breakthroughs in cancer treatment, and many investors search for smaller companies connected to this field, hoping to find future winners early. But here's the reality: every investor needs to understand none of this guarantees success. Clinical stage biotech companies fail constantly, and many promising therapies never reach approval. That's why biotech remains one of the riskiest sectors in the market. Another major concern surrounding HCWB involves cash burn because clinical development requires enormous ongoing funding. Investors constantly monitor how much cash remains available and whether future dilution could become necessary. If financial pressure worsens, dilution fears usually rise quickly. And when dilution fears rise, penny stocks often collapse, regardless of how exciting the science. That's why experienced traders never ignore the financial side of biotech investing. Sometimes good science still fails because the company simply runs out of money. Now let's discuss Nasdaq compliance, because this becomes very important for low-priced stocks. If a stock trades too low for too long, delisting concerns can appear. Companies sometimes use reverse stock splits to maintain compliance, but traders often react negatively to those announcements. HCWB investors remain divided because some traders believe the company could eventually recover dramatically if clinical progress continues, while others believe financial challenges may become too severe. That split opinion creates strong volatility around the stock. And volatility is exactly what attracts speculative traders, because biotech penny stocks can sometimes surge 50% or even more within days when momentum suddenly arrives, especially after positive news events. But the same volatility also works in reverse, because biotech penny stocks can collapse just as fast. Now let's talk about market psychology, because investor emotions heavily influence penny stocks. When a stock falls massively, many investors assume it's dead forever, but sometimes deeply beaten down. Stocks attract attention precisely because expectations are already extremely low. Even slightly positive news can create strong reactions. That possibility keeps HCWB on speculative watch lists, because the company still maintains active programs and ongoing development efforts. Traders constantly search for signs that momentum could return, especially if the broader biotech sector heats up again. Small catalysts can create chain reactions in penny stocks. Another interesting aspect of biotech investing is that larger pharmaceutical companies constantly search for promising technologies. Smaller biotech firms often spend years developing innovative treatments, while larger companies wait for encouraging data. If a smaller company shows enough promise, partnership or acquisition, speculation can emerge quickly. Now, I'm not saying HCWB will definitely become a takeover target, because nobody knows the future. But biotech history is filled with small companies suddenly receiving major attention after positive trial results. That possibility is one reason speculative investors continue watching HCWB closely. At the end of the day, HCWB represents exactly the type of stock that divides investors. Some see a BEAT-in biotech company with explosive recovery potential, while others see a dangerous dilution risk with uncertain survival odds. Both sides have valid arguments. So now I want to hear from you. Do you think HCW Biologics could eventually surprise the market with a comeback, or is this just another risky penny stock trap? Let me know your thoughts in the comments below, and if you enjoy discovering high-risk, high-reward stocks. Before the crowd, subscribe, because the next explosive biotech runner could already be quietly setting up right now.